Right, stock market analysis and projections. First, some important information. This tells you the slide about our approach to the markets and about how you use the information and about the importance of trade ownership. You have to own your own trade, not what anybody else says, because then you're going to be able to learn how to maximize it or minimize the loss if it is wrong, not waiting for somebody else to tell you that it is wrong. And wrong means wrong in many ways, not only because you're losing money, but because the analysis is changing. And it's all about your own level of risk management that makes those decisions, not anybody else's. Matt earlier on in the show told you about our level 3. This is the final 3 days through this weekend. Please do. I'm going to show you a lot of things that are in level 3 going forward. So please do sign up for that. It's just $232, $77.33 a month, a regular $119. If you have any questions, you can write to Matt at askSlim.com or go to the top of the website and you'll be able to see our level 3 offer right up there on the top. Yes, this is me trading on the CBOE right there, 1974, screaming as I'm standing in the IBM pit. IBM and Sears and Ford, they were all together. Those were the 3 stocks that I traded on the CBOE in 1974. There I am doing cycle analysis by hand down there in the early 80s. You could see that spaceship looking TV with the rabbit ears. So that's it. And somebody just said, nice hair, Slim. Yeah, I had a good amount of hair back then. Of course, there I was only in my early 30s. So 3 days left for this special. So do sign up for that. It's just so much information. And I'm going to show you a lot of that right now. Stock market analysis, multiple time frame and projections. We're going to look at the SPX, NDX, and the Russell. I might even take a peek at FEZ because I think it's important to the analysis, and our proprietary applications and indicators. Let's actually start out by looking at some of our apps and indicators in here that I think are important. You know, you've just seen a lot of our analysis. If you watch the team go through everything, and you saw some of my analysis there as I went through the yen and the gold and Bitcoin and bonds. This is our futures hub. Now, we have some other hubs also, but I wanted to give you an example of this. Where you can come in here and get, you know, for level 3, remember, you're going to get our static charts, but they're fantastic. They're updated all the time for you, and they're right in here. So if you want to know the S&P 500, I'm going to show you the live charts right now, but this essentially is the same chart right over there for the weekly chart. You can blow that up as you see. And then you'll be able to see all the information. You can look at the daily chart. You want to know our video analysis. This is RV's Future Speak analysis right there, that you'll be able to watch the analysis in the video and all the technical details, the cycle low dates that are in there, and the key levels that are in there for weekly and for daily. All of that is available to you. And then when I do the updates, I send the most notables and everything. And you can see that little thing right there. You just click on that and it brings up all of my notes to you regarding the conditions of the market and changes. So this is how you can see, and you can see in here that the indexes are showing the colors, which are essentially the conditions on the cycle analysis. This comes off of our ranking system. So you can see the conditions of the metals, and you can see the grains and softs and Bitcoin. These are still neutral, but I think they're going to be turning positive soon. So all that information is in there with all of the comments that I have, as you can see right over here. And you'll be able to learn a ton and use this and get all of our charts. So it's a great way to get all of our charts. Also, so now that you see the conditions in here and everything, this is the fantastic market conditions monitor. This is a good way for me to start this analysis because DJV, you asked me about the condition where I said that the Russell was a little behind, and you can see in here it gives us neutral reading. The reason for that is because the intraday is starting to slip in here. So there was a downtick in the condition from bullish to neutral back here on the 25th. That's a couple of days ago. But these other indexes are still bullish. That's for the short term. Let's take a look like with the intermediate term, and you can see all solidly bullish right in here for those indexes. If you're a near-term swing trader, just for a few days, you can get the information right in here, and you can see that these things are changing. These bells are because I have alerts set up with our alert application. You can write to Matt at askSlim.com, and he'll give you the information on how to use that. But I wanted you to see all the conditions in here. Let's just look at the short term and take a look at trade setup conditions. And the very bullish ones that we have in here, I'm just going to scroll down because this is so important to all of your work so that you know what's strong in there. And you can see I'll stop as soon as the very bullish stops. Keep going, very bullish. Wow, there's lots of them there. Very bullish. Matt just did First Solar, gave that information. And for solar, and that was bullish. So these are all bullish. We just upgraded the semiconductors, as Katie told you, very bullish. So those are the ones that are really strong in there. Let's just switch over here to trade setup conditions for the ones that are very bearish. And you can see in here the dollar UUP, Devon, which is an oil, XOP, which is oil. Now, remember that we were looking for another downside in the oil, and that's what we're getting. OIH is the drillers. You can see these are bearish, but the very bearish ones have stopped there. So I wanted to show you different ideas and how you understand market conditions before I get into the indexes using our applications in there. And let me just pull up one more in here. And then let's see if I can get this to show. And there it went. Here is our rankings right over here. And this is a fantastic application. Now, this takes the 84 best traded symbols, optionable symbols, futures, and looks at them a little differently. This has our algorithms built in. So I'm going to look at the very bullish right in here first. We'll start out there and see which ones are very bullish. This is long-term, intermediate term with the cycle condition in there as P3. So we know that the Chinese stocks, if you watch the beginning of the show, it shows you the Chinese stocks have turned up in a monstrous way. But now our option bias indicator is saying they are extreme overbought. So for the very short term, the upside is probably near over. And if you were a very short-term trader, this is the extreme that I would consider taking a very small short side trade when you get this kind of a reading. So that's the ones that are very bullish. I'm just going to sort here on the OBI and go to where the orange ones are: Baba, Baidu, Caterpillar, Deere, FCX, LUV. Those are all extreme on the upside and likely to stop and give you some kind of a reversal. The FCX you have there, LUV, LVS, PayPal, UAL, Win. Those are stocks that are likely to give you reversals. And there's some more of them right in there. You see EEM, the emerging markets, FEZ, which I'm going to show you in a few minutes, FXI, which is the China market, FDX, is negative. In other words, it's very oversold and likely to give you a bounce. So if you're looking for something to buy on the real short term, that N1 says very bearish but oversold. Here on the US Canadian dollar, very bearish but oversold. I'm sorry, neutral to slightly bearish, but oversold in here. So that's using the option bias indicator is how you can really get a good feel for that. Let's just look at the ones in here that are very bearish. And you can see in here, Boeing, FDX, light crude, gasoline, heating oil. That all makes sense. You see the algorithms are picking all of that up. As you can see in here, all of that stuff coming across. And if you were, again, level 3 in getting this application, then you could, this is another way you could get in here and look at those charts right there, which are available to you to see by clicking on the charts, weekly and daily, and all of these. So again, this is for level 3. And that gives you a very, very good overview of some of these internals of what's moving, what's strong, what's weak before I get to the indexes, which kind of are a global look at the market. So instead of having the global look, we look at the internals. So when we look at those applications, and it gives you a very, very good sense for what groups are driving the market in one direction or the other, which ones are at extremes, and what the overall conditions are in the market. Because if you want to buy, you don't want to buy a stock that is weak because the probabilities are momentum is going to keep it going down, and the inverse on the upside. If they're bullish, then they're bullish, and you want to be buying stocks that are moving up. So I kind of wanted to show you those applications before I got into the specific indexes, which we're going to do right now. So now I'm going to move this out of the way, and I'm going to go to the askSlim level 4 chart grid right here, which you can see this is what our level 4 members get with our live charts. And now I'm going to blow this one up, the S&P 500, and then up on the top you can see the arrows, and I can just go across to all of the different time frames to look at that. So stock market much stronger than we had expected it would be. Go back to the beginning of the year, nowhere near this, even though I thought it was a bull market year. Never thought it was going to get up to these levels. And I talked about in the beginning of the show, what were the things that pushed the market up to these extraordinary levels of getting up to a 200% market cap to GDP, which I have noted right over there, as it's done that, and the getting up into this fib target zone, which this is the 78.6% right there. This is the 100%. That's the minor 100%, the minor 78.6% there. And this was the cycle peak right there, which aligned with the 61.8. So that's how we have all of this stuff. And we understand as it moves up through resistances and as the momentum conditions are positive, well, it tells us that the market still has upside energy. This is the period of risk. This was the window of time for the market to peak and for a decline to occur, September to November. Of course, here we are in September and getting towards late September, and there's been no sign yet of any kind of a top, no selling coming in, and the market again pushed up by China's stimulus in this last week. But again, to levels that are nosebleed levels when it comes to the valuations. And in the beginning of the show, if you're just tuning in now, or you scrolled forward, or you're only watching the clip for the stock market, then I talk about the comparative values between China and the United States. And go back and watch that. If you haven't seen the beginning opening comments, that is very important to understand why the stock market could just naturally have a pullback in here and or a more significant correction. Coming down to this level right over here, which is 54.40, is only about a 6% decline. This was a 6% decline. And notice it comes in the last 3 weeks, sometimes in a very strong cycle. You can see in here the previous one actually fell for about 12 weeks because that was not as strong of a cycle. And it is common for just the last few weeks to get some big downside in there. And that's what we're getting to in here. So here we are in September. This out over here comes into mid-November potentially. So there could potentially be some very hard downside weeks coming out over here. When I look at, remember, pay attention to the momentum in here, still positive. So no sign on here of a top, though the valuations say it's coming soon. And over here, that level right over there is 58.30, which is something we've been looking at as the very outside of where this rally could get to. Now, this is the slim cloud. Now, for our members in here who receive this, you'll notice that it's redrawn today because we were up at in a track or in a channel that had gotten well above here. So for clarity, I redrew what it looked like, and you can see again, this projects up to 58.16 to 58.30 right in here. And this cycle in here forming in a very positive way, just as this one did in here. So what does that tell me? It tells me that this correction over here, which is due into the second week of October, is likely to hit supports and then move up again. And this peak over here, which is likely to come somewhere in the first to the third week of October, I'm not exactly sure where, the market will have to tell us, is likely to be followed by some very hard selling as the market then does top somewhere in there and then be affected by this period of risk over here on the weekly chart. Right now, there's nothing affecting it. Right now, it's positive. You could see in here the option bias study, solid green. When that happens, it tells you to bias your option positions to the long side. Here, when we look at the momentum on the daily chart, this is the area version of the slim ribbon, which screams at you about market conditions for the short term. And this one, as you can see, very positive when you look at that. So S&P 500, super positive. And for those of you that are short-term intraday traders, very short-term swing traders, I keep telling you, this is the chart you look at about about biasing your positions, about the fact that when you have this kind of condition, the probability of an upside move well outweighs the probability of a downside move, and you need to really be long if you're a very short-term trader. So you could see that in there, and you can see that in here where it was pointing to the downside, that was the period you wanted to, trade the short side. This is a period you want to trade the long side, because that absolutely makes the most sense. When this slim ribbon PO turns red, right over there, or the slim ribbon crosses over, is when you know that that is changing. And that is the first warning and kind of the domino effect for the longer time frames that we look at. Take a look at the NASDAQ in here, and you can see, well, it's pretty similar. Here is your period of risk between September and November. Again, that is the window for the market to begin its corrective decline. We don't know where it's going to start. The market has to tell us. And here's the supports in here. We would expect that when the decline comes, it will get down to somewhere around 18,650, 18,650, to the potential in some kind of a panic to 16.8. That would take quite a panic. But if you look at that, I mean, that's only about 8.5 or 9%. So that's not all that big, even though it looks the way on the chart. That is pretty much a normal correction. And you can see the harmonics in here and the magnificence of it as each of these time frames where you get into where these cycles are coming down together. Each of those bring corrections. Here, back over here, when you look in the beginning of 23, here in the middle of 23, here in the middle in March, April of 24, and here right over here. Those bring the selling, the corrective periods. And coming into the election time right now, I wouldn't be surprised if it was more like 8 to 10% on the downside in there. That is the weekly, and momentum still pointing up. Time to be short? Well, that's not telling you so. All we're doing is giving you the warning. The window is here. Here you could see taking that upside channel again and starting to give you a little sign of stalling, but not significant. That level right over here, which is the 78.6% built off of this cycle right over there, is at 2,004.25 or 25. The top of that at the 100% extension is a 2,960. So it still has room. And again, this correction right in here is saying to me, it's likely to be positively configured, higher high, higher bottom. That means that this next cycle out over here into October is likely to get up and test that level, 20,400-ish. And then is where it turns over and begins to get affected. So we said that there was a little bit of shift in here in the expectation of when the correction would come. And this is why, because of the formations in here that are speaking to us. Option bias indicator, extremely strong. Here you could see the daily momentum conditions, green and strong. Look everywhere on the bottom where that slim ribbon PO is giving you that signal, and you can see the value in that where it tells you the momentum conditions are resuming. And in here, you could see it's likely to maybe to come down a little bit again, and then you get that upside arrow. So there's still good, solid momentum here on this chart. On the bottom, I didn't talk about this one yet, but for those of you that are familiar with our indicators, this is the market condition indicator. This is the first one I built because I really wanted our applications to give you a great sense of market conditions. When it gets into this zone between the 25 and minus 25 is when it tests. If it breaks it, it then says the weight of the longer time frame, because there are 4 time frames in here, the weight of the longer time frames is heavy on the downside. Here, where it tested again and moved through, it said that was no longer the case. The weight of the longer time frames were pushing to the upside. That told me market conditions were strong, and you can see it continued up here as it got up to about 90, and it goes between minus 100 and positive 100. And this gives you a good indication, along with the slim ribbon up here, that the conditions are strong. And if you were in the NASDAQ, you needed to bias to the long side, and those conditions still exist. Take a look here as you look at the Russell. And the Russell has strengthened in these last couple of weeks, but still is not up to a new high, just as we see here, saw on the NASDAQ. And likely that we're going to see that pullback again, and over this time frame, which takes you into November. So you have all these alignments. Look at the multiple harmonics that point to that right down over here. And look right over here where all three of them were coming down. What happened? Absolute slam, whacked. What about where all three were coming down over here? Absolute slam, whacked. This was 6 weeks to the downside. This one over here was more like about 12 weeks, 11, 12 weeks right there. And this one over here, well, we're only looking at about 6 weeks time frame in here. That says to me that this window between September and November is likely to see the same thing happen. And very reasonable to see it down over here to about 1970 right there. And that would be something like 12%. To the downside there. You see these minor supports right there? Those could stop it. It could get in here and stop and give you a very bullish formation in here, which would then say the next rally will go to a new high. So the depends on the shape in here or the magnitude of decline, but we're getting into this window for a drop. Here you could see the it gets up to the top channel in here. Now, this one is really weakening, as you can see, and we had a question in there from DJV early on in the show that said why you're saying that it's weaker, and this is why it's weaker. The algorithms are picking up this change in the market in here, and we're likely to get a downside move here into mid-October, another upside move, test some levels there, and then this comes down over here. That let's just get this to where it tells us the dates right there. So this points to a low of November 11th. That would be about a week after the election. If I go back to this chart here, this is November 11th on the weekly. So the weekly November 11th, the daily November 11th, those three cycles all pointing down. And all we have to do is start to see the momentum give way here and start to see this turn negative. And then we're going to have a sign something is going to happen. The 2-hour chart would tell us that first, but in the meantime, everything that you're looking at here is still positive on the 2-hour chart. It actually went neutral here and then went positive. So you're having a little bit of a wiggle going on in here as you see the slim ribbon gets flat. And when that happens, you just don't have a momentum condition that's readable. So we'll be waiting to see if this turns down and negative again as a first sign in the Russell. That is it. That is my analysis on the indexes. I really wanted to give you a good look at our applications, a good look at those market internals and those segments, what's strong, what's weak, and how you see it. And of course, if you become a level 3 member, if you're not right now, you'll be able to get everything that I showed you in there, except for the live charts. Those are level 4 members for the Thinkorswim platform, but you'll be able to have all those charts in static version and all the applications that I just showed you. Absolutely fantastic in